For Section 7-1, Lesson 7-1, we are going to be preparing an income statement. So we've done all the legwork in Chapter 6 by preparing those columns on our worksheet. So really, it's just a matter of getting it into our income statement. And then finally, we're going to calculate some financial ratios. So now we're going to be looking at and comparing numbers and helping maybe a manager or owner of a business make some decisions. So that leads us to our first two definitions. The first definition is financial accounting. So let's say you are really enjoying accounting and you think that that might be something that you want to pursue after high school. So there's two different areas you could get into. The first one is financial accounting. That is when you're preparing these financial statements used for external users. So when we were doing our very first assignment of the year, comparing income statement and balance sheets for two different companies, those were prepared by financial accountants. And us as external users, we're looking at that information. Another area of accounting is managerial accounting. That is when you are preparing information for internal users, such as managers or the owners of the company. Managerial accountants might be a little bit more involved in decision making than a financial accountant would be. So if you enjoy being involved in those decisions, maybe you want to do managerial accounting to help provide that information to those above you and maybe be involved in some decision making. So it's really important to note that all the information needed to prepare the income statement is obtained from the worksheet. So you don't have to recreate the wheel here. We've already moved the numbers to where they need to be in the correct columns on our worksheet. Now we're putting them into the income statement form. So those numbers straight from our worksheet in the income statement column with the correct account titles, the correct account balances, straight from the worksheet, will be used to create our income statement. So the same 3-line heading that we use for all of our forms is going to be used for the income statement. Be sure to complete the 3 lines, the 3 steps on your note guide, starting with step 1, the name of the company, step 2, the name of the report or the name of the form, and these are all centered, and then finally, the date. So the date is for month ended January 31st. So that's saying it's for the month of January. These numbers are compiled over the course of the month, and that is showing our income statement amounts for an entire month. So that is our 3-line heading. Now we are going to create the income statement. So we have some headings on the income statement. So on your note guide, I want you to star or circle or underline our 3 headings. So notice that our headings are left aligned, revenue is left aligned, and then everything underneath revenue, so we just have the one sales account, is indented. So you could see that revenue is a heading. So we have our revenue heading, and then all the revenue accounts that we have, which is just one for Delgado Web Services, listed beneath that. And then the account balance for sales. Next, we have our expenses. So you should have revenue and expenses highlighted, underlined, or starred on your note guide. We have our expenses listed, left aligned, and then we list all of our expenses beneath that, indented slightly to show that they are underneath that expenses heading. And we have our expense amounts. And then finally, we have an underline to show that we're going to add everything above that. So underline underneath all of our expenses. Then we write total expenses and put that number on the right column. So all our final numbers are on the right column. For sales, that amount went straight to the right column because we only had one amount. For expenses, we had to total them up. So they are in the left column until we get our total, and we put that in the right column. Our totals are on the right column. So we have our revenue, $5,820, and our expenses, 2,658. We draw a single underline to show that we are going to do some math for the numbers above that line. And we take our revenue minus our expenses, and we are left with a net income. So that's the other third heading that's left aligned. And we write our net income, 3,162. And we end with a double underline showing that this income statement is complete. Anyone who's looking at this income statement knows that these numbers are final. They've been verified because we have that double underline. So that is what our income statement looks like. Some key things are those three left aligned headings: revenue, expenses, and net income. And then our final or total numbers are in the right column. So sales, it was one amount, so it started in the right column. We have our expenses. We total those up and put the total in the right column. And then finally, net income. So that is a completed income statement. Now we are going to use this column that says percent of sales, and we are going to use that column to do some calculations that might be used to make decisions. So we are doing some analyzing. It is important to note that everything that we do, we are going to be dividing by sales. So everything is divided by sales. We have our expenses. So our total expenses ratio is total expenses divided by total sales. So we take those two numbers, and our expenses equate to 45.7% of sales. So that's an interesting number. That could tell you if that's too high, we probably have a net loss. So if it's above 50%, we'd be left with a net loss and we'd need to make some adjustments. If it's really low, that could show that we have a very high net income, but it also could tell us that maybe we need to spend a little more to make a little more. Net income ratio, net income divided by total sales. We're always dividing by total sales, and we're left with 54.3%. Notice that for percent of sales, the percent of sales, we have 100%. Anything divided by itself is 1 or 100%. So those are our two ratios that we might use to make some decisions. So anytime you're comparing two numbers or two components of financial information, that is called a financial ratio. So that is what we just did. We created some ratios. Everything compared to sales. What percent of sales was expenses? What percent of sales was our net income? So the calculation and interpretation of those ratios is called ratio analysis. So that's when you provide those numbers to a manager or an owner, and they might make some decisions based on those numbers. Notice that these numbers are all vertical, so up and down in the same column of our income statement. That is called a vertical analysis. When we're comparing numbers within the same financial statement to numbers from that same year or that same financial statement, it's a vertical analysis. As you might expect, we're going to eventually get to horizontal analysis in future chapters, future sections. So a vertical analysis is when we're dividing numbers, comparing numbers to numbers within the same financial statement from the same financial period. So that is section 7-1. And the last thing we need to do is see how this changes a little bit when you have net loss. Really, this doesn't change a whole lot. That's why we're just going to show it here briefly, because the headings remain the same. The only difference now is that our net loss instead of net income. You'll also notice that net loss is shown in parentheses. Parentheses show a negative number. Obviously, if you're losing money, you have a negative number. So that's the difference between an income statement with a net income, which is what we hope we have, and a net loss. At the end of the section here, we have 3 different questions. Answer the questions on your note guide. Pause this video Answer the questions, and then go back through and verify that your answers are correct.